One really good thing about my presentation today is that I'm not going to be able to sell you anything right away. So, and the reason is because my site is under maintenance, and which was just as much a surprise to me as it is to you. Well, I guess it's not a surprise to you, but it's a surprise to me, and therefore, so I'm going to show you my offer up front, and then just relax and show you what I got and show you what a simple trading plan looks like. I'm going to describe to you today a simple trading plan that I call Loaded Gun, and I may change the name for obvious reasons. I think it may not be the right name. I named this thing 6 months ago, and I named it Loaded Gun because of its the trigger used, another gun word, but the trigger that I used to get into trades looks like a gun, and I'll show you that in a second. But I am very much into complete, simple trading plans. Something very simple, something that you can follow, because I believe that the most important thing is not your trading plan at all. The most important thing is the mental and emotional issues of trading. Now, where we at the Disciplined Trader is our main site that we've been running for about 14, 15 years now, the Disciplined Trader, and we are the main conduit for trader discipline. We actually, although I've written books on it and so on, the idea is that to change your mindset, you need to change what's inside. And to do that, you need more of a meditative state to reach your subconscious mind. I don't want to get crazy on you here or lose anybody, but I will say that if you close your eyes for 7 minutes and listen to positive things about being a trader and turn your things around, like your afflictions, your mental afflictions, not being able to pull the trigger, not having patience, which is a big thing. You need to concentrate. You need to train your mind, and we have that program 7 minutes a day. So the Disciplined Trader is where to find that. But today I want to take the next step and say, what good is being mentally and emotionally disciplined if you don't have a simple or a good trading plan to follow? And that was the problem with the Disciplined Trader. I was training traders, thousands over the years, to be disciplined to follow their trading plan, and their trading plan sucked. It didn't have the right defenses. It didn't have the right target. It didn't have it all. And so you need a trading plan that not only tells you when to get in and when to get out, but how to manage things along the way. And I think Wally or anybody else, Trish, who will be following me, will tell you that you need all the elements in the proper trading plan. A simple trading plan that I've started to develop about 3 years ago. And I'm going to show you the most recent one that I've been working on almost exclusively for the last 6 months. And it's called Loaded Gun. And the offer is that you're going to get the complete trading plan. And it fits on one sheet of paper, the entire trading plan. But there are nuances. There are things that happen in the market as you work with it over the months and even years that you realize that you can even be a little bit more successful and a little bit more successful. I call them nuances. So you're going to get the total explanation of the Loaded Gun Simple Trading Plan in a video. You'll get all the nuances, and I add them all the time. I bring you into webinars when I'm getting a bunch of questions and so on. I have periodically, I just go over new things that I've discovered in this particular trading plan. It has not launched officially yet. It will be $9.99, but I want to get people in trying this. So it's a no-risk kind of thing, 60-day guarantee, no questions asked. It's going to be $397 for everything that you see on top that I'm about to show you. But you can't do it now because the site's down. You can go to simpletradingplan.com/LG, so write that down. So if you like what you see after this, then you'll know where to go. And the most important thing, I think, is if you take a look at this and you want to buy this and you want to try it on the 60-day no questions asked guarantee, email me today, nhallet@thedisciplinedtrader.com. Email me today so that I can give you the bonus. I can make sure that you are on this presentation. I can give you the bonus, which is I'm going to give you a Disciplined Trader mug, which all the members really love that, or a leather-bound journal. We used to retail it for $39.99 on our site. It's a beautiful leather-bound with gold leaf. You can have one or the other just for giving it a try. So I wanted to make sure that you had all of this that you won't be able to utilize right now. But write down simpletradingplans.com/LG. It stands for loaded gun. And then, but most importantly, I think for now, write my email address down. That goes directly to me, nHallett at the Discipline Trader, and then you'll be able to. And let me know you're on this and you're interested. That when the site gets off maintenance, to remind you for the link, and I'll respond with the link again when it goes. Okay, I think you got all that. I'll try not to talk so fast. Let's get into loaded gun. And I'm just going to show you this one page, and then I'm going to give you example after example after example, and then we'll take a look at maybe some stocks or commodities that you want to take a look at and see if what I'm talking about here in the loaded gun simple trading plan will work or has worked on stocks that you like or commodities that you like. I'll be showing mostly commodities in these examples. Apart from, well, Wally said he holds things for a month, 2 months, whatever. He's not a day trader. I'm a little older, I believe, than Wally. I'm older pretty much than everybody, except for my friend Joe Ross. He's a little bit older. But I like to sleep at night, so I generally don't carry positions overnight unless they're very high probability situations, like the stock market closes very strongly on a Friday on a weekly low, or on that weekly low. I like to hold that till Monday because there's a very high probability you'll see follow through that next day. As of course we saw this last, not this last Monday, we saw a nice follow through. So able to take advantage of that from time to time. But 95% of the time, I'm out of all positions by the end of the day. So what I'm about to show you works on stocks, works on intraday everything, works on Forex. Now I'm describing to you the trigger. Okay, here is the trigger, and I'll get into the management when we look at the stocks or we look at the actual charts. This right here is just about, this is the main trigger. I think if you look at our logo for the loaded gun, and it looks like this. Of course, this is the handle. We have the trigger, and this is the barrel of the gun. That's why I called it. This, of course, is a buy. This is a trigger with buy. Now, let me get into what you're looking at here, and then the other three examples. Let me take a drink of water. Okay, the first part of this two-part trigger is a doji or a spinner. Now, strictly a doji, there's no difference between the open and the close. Quickly, for those who are new to candlestick, I'll just take 60 seconds and tell you that this represents all the trading that happened in whatever period of time we're looking at. Let's say this is a 30-minute bar chart. So within that 30 minutes, we went from the bottom here to the top here. But there's a lot of area here in the green. And when it's green, it means that during that 30-minute period, the market closed above where it opened. The market opened here and closed up here. Okay, that's why the candle is green. Now, the wicks or tails on the top and bottom are the areas above and below the open and the close that the market traded during that 30-minute period. So this had a nice up move during that 30-minute period. It looks like it started here. You can't assume that it started here, went down a little bit, and then shot up, went up, and it could have gone nuts in that 30-minute period. And so you don't want to assume anything other than what you're seeing here, and it opened here and it closed here. See, I'm a believer, as the Japanese were when the farmers that invented this system, that the rubber hits the road at the beginning, when it opens and when it closes. When it opens and when it closes. So if somebody's trading this on a 30-minute chart, the most important feature is when it opens and when it closes. Those are the most important statistics to me. The rest is just who knows. People are deciding what to do in that period of time. And when you get a situation like this, in this bar, which is almost not even a bar, you can see that the open, it's red, so it means that the close was below the open, but it opened here and closed down here. So you're looking at a very, very tight open and close range. Most of the trading occurred outside the open and close in this 30-minute period. This is indecision. Now, a doji would be where the open and the close are exactly the same price. A spinner is where there's a little space, but it's small. There are, like this one here is a spinner too. Small body and tails coming out of it. let's go back to this one here. So here is a situation where you had a lot of indecision because the open and closing price were almost identical. In fact, the range during this period of time was very small. So the market during this 30-minute period, traders could not decide whether they wanted to go long or short. They put a doji. Now, it doesn't, and the mistake people make is that a doji or a tight spinner like these things that I'll show you mean indecision and a turn is coming in direction. Does not mean that. It's equally possible that it continues in the same direction that it has been trading in. Okay, so we have our spinner here, or doji, whatever you want to. Let's call it a spinner. Let's what it is, because again, a doji is exactly the same open and close, but indecision. And then all of a sudden, the next bar, we have a dramatic decision. This is what we're looking for: a dramatic move in a direction after a spinner or doji. Okay, a tight spinner or doji. All right, so the market, after not knowing what to do, has made a strong decision that we're going higher. Now, if this happens at the same time in the 8-bar exponential moving average, okay, 8-bar exponential moving average. There's a regular moving average, a standard moving average, and there's an exponential moving average. In an 8-bar moving average, it takes the 8 previous bars and averages them up and makes a point. In an 8-day exponential moving average, it gives more weight to the more recent bars. That's all I'll say about an exponential moving average. Anyway, I've been working with this system now for 6 months, and the exponential moving average works considerably better than just the exponential moving average, and I'm going to show you why in a second. So if we had an exponential moving average moving through here, okay, I'm not drawing it here, but let's see if I can draw. Let's use a pen. If we had an exponential moving average, if the moving average was here, this would be a perfect situation to buy. This is a buy trigger because we had a doji or a spinner followed by an extended move that breaks through the 8-day exponential moving average. This is a buy. You're either going to buy up here at the close, got to wait for the close, or the first tick or the open of the next bar. Okay, so some like to buy want a total confirmation, or they don't like to buy it 2 seconds before the bar ends and at the very end because something can happen. So either way, at the end of the bar, the beginning of the next bar, this is the buy trigger. All right, let's take a look at this one here. Here is another spinner. It's a body distance here, the distance between the open and the close. I don't like to get much bigger than that. Okay, I want real indecision. Let's go down here. This body right here, and followed by this is not a trigger. And the reason is because this body's too big. There's not enough indecision. There are enough people thinking both ways here. So this is not a trigger. This is another trigger. Now, it may not be a trigger you take. In other words, here is a small spinner followed by a dramatic move. Now, what I haven't mentioned to you yet is where I put the stops. Okay, the stop is going to go above the formation. So if you sold this down here at the close of this bar, you would be putting your stop either a tick above or 5 ticks above, wherever you feel comfortable in that area. Up above here, your stop would be going below or above the formation, depending if you're long or short. In this particular case, to go short here and to have your trigger here, you really have to measure your risk, okay? Because sometimes you may want to wait until this backs up a little bit. In other words, if we were coming here with our 8-bar moving average, 8-day or 8-bar 30-minute bar in the case of this example, because I gave it a name, 30-minute bar exponential moving average, you would be buying down here, or you'd be selling down here, I'm sorry, and you'd be putting your stop up here. If this market backs up, then you're going to get a better price and still be below. It's important to continue to be below, in the case of a short, that 8-bar exponential moving average. Okay, so you can reduce your, if this is too much of a risk for you when you to take the short trade, because you've got to measure risk. If it's more than a couple of percent of your trading equity, you may want to wait. You don't take the trade, and if the market comes up and comes in here, especially 50%. This is something that I talk about. Many times these bars correct about 50%. Shorting it here is going to give you still maintain it below the 8-bar moving average and reduce your risk. Okay, that's enough I'm going to say about it here. Well, when do you get out normally? Two closes. In the case of this, where you're short, 2 closes above the 8-bar exponential moving average. And there's some nuances to that. So here's where you get in and you get out when the market closes on 2 consecutive bars above the 8-bar exponential moving average. Okay. I'm going to show you a lot of examples that will clear this up if it's confusing to you. This is what I am discovering, and I did a lot of work on this particular formation in the last 10 days. This can be the ideal setup, where you have a small body. I like to even see it a little smaller, but this is good because you got a big tail. These tails become, this is a big factor. The market traded all the way down here during this 30-minute period, but closed up here and had a small body which meets our criteria by a strong extension. I like to see a little stronger extension, but in this case, because we have the long tail and we cross the 8-bar exponential moving average, this would be a buy up here. And of course, again, you've got to measure your risk, because essentially your risk is going to be down here below the bar. So let's get to some examples. Let's get rid of, let me get rid of, let's see, non-drawing mode. Okay, I think we're back. Unless, yes, it's letting me change. Okay, oh, this is what the simple trading plan looks like, where I'll show you that in the end if I can. Let's get to some examples. This is what my trading screen looks like. I trade off one screen. I guess let's erase that line. Erase all drawings. Okay, this is one of the screens I wake up to, and as you can see, I got a lot of windows down here. I trade from one screen, a regular looking screen, which is very rare for traders who've been in it as long as I have. But again, with simple trading plans, I like to be simple about it. Let's go to gold. Okay. And let's go to 30 minutes. I look at the 240, I look at the 30, and I look at the 10. Sometimes I look at the 60, but I'm going to show you some windows I have when I scan all of this. Let's look at the 30-minute, since we're about half through our time, and I want to make sure I get a lot in here, a lot of examples. Okay, let's look at what we have here. I'm looking for a trigger. Let's start here. I don't see any triggers. Well, here's a possible trigger, but again, this body is too big. Okay, so you're looking for a trigger. Now, and again, not all of these are going to work. Here's one that didn't work. Here's a trigger. Okay, nice small body. You'd be shorting in here. We got we're still below the 8-bar moving average. Okay, and here we have your stop is up here. We'd be out here in this particular case. So we would have lost a few $100s per position in there. We have a nuance where you wouldn't be waiting that long. After 5 bars, there's something that we do. But let's keep going, and I don't see many trades in the 30. This bar is a little bit big. Let's take a look at the. Let's take a look at the. Here's the 200. This is a 4-hour chart. Now, I will say that in general, there's a slight edge to the longer charts, the longer windows. Okay, 10s work. 30s work even better, 60s seem to work, and so on and so forth. I think the sweet spot they all work, but the 30s and 60s seem to be the place I've been spending most of my time. All right, let's take a look here. Here's a signal here. Now I'm not zooming in on this. You'd have to see whether it crossed or not, but if it did, you got a little here. Here's a signal here. Now I want to say something about when you enter. You want to enter with two positions when you can. And I like to enter with two positions and take my first position out at a target that's equal to the length of the explosive candle. So if this was $3 or $300 in the case of a gold contract, you would buy two here, and then you would be out right in here of the first position, and you would hold the second one until there were two closes below the 8. So you take your 300 here, you continue. Here was a little scare, looked like you had your first bar that put you on alert because this bar closed below the 8. And you still came back up, looked nice. Now, at this point, you may want to defend in some other ways, and we go through that when you start to get a really nice profit. But you really want to ride these things because it's got an explosive nature to it. You would be out. Oh, thing I didn't mention: when you take out your profitable position, the first one, you move your stop to break even on the second position. Okay, so you move your stop to break even in the second position, and then you're out right here. So you're even on your first position, you got something on your second, really on something that really didn't work out too well. Here's another signal, a short signal. All right, you're short 2, you're here, you're almost out, but you're not, and you're out right here. So this one you took a short loss on both positions. Okay, here's a big candle and a small body with a big candle. And look at the ride that one would have taken here. Here you would have gotten into two positions, and maybe you would have waited till you got a little bit of a correction. And that correction, the best way to get in and judge the correction is before it touches this. And you don't want to, it can cross, but I like to apply my position. If this risk is too large, I like to apply my position on a pullback that's near the 8-bar moving average because it likes to hug it along the way, as you can see. So if you were in here or in here, doesn't matter. This is a big move from 410. This is about a $3,500 move. So not everybody would be taking this position. So if you had a $100,000 account or $50,000 account, you could take two positions here maybe. But even if you reduced it to one position and just wrote it with the basic rules that are on the one sheet of paper that you get with the disciplined trader, the simple trading plan, look at this ride you took. I mean, this looks like it's don't quite know how to get rid of it. I can't quite see it, but you probably can see it. Let's see, 40, 60, 80. 70, and it looks like 15. You know, you're talking about a move of $10,000 for $8,000 per position. So you can see how, and I'm just pulling charts out of here. I want to take another look at that chart and show you something else. We talked about wind at your back, and although we didn't see that right here, I'm going to show you that a little bit later. I'm going to show you as many nuances as I can. But the basic formula is wait for the trigger, take on two positions, sell or buy or take profit on one of those positions when you get a movement equal to the length of the explosive bar. Make sure you put your stop in above or below the formation, and then move it to break even when you take your profit on the first one, and you're not out until two closes on the other side of the 8-bar moving average. Let's take a look at the yen, which is something I've been trading a lot on. Let's take a look at the 30 because I've been trading a lot on the 30 lately. Let's see. Well, and this is something we talk about. Here's a signal here, a doji with a body. Is it too late? You know, that's up to you. But I like to take them when they first cross. But if you did here, you had a nice ride. Here you have a small body and not enough extension for me. So I probably wouldn't have been in this. And there's ways to see if these two candles would have combined by lengthening to a 60 and seeing if you do get a signal on this, because so there are a lot of nuances, but I just have time to show you the basic stuff today. So let's keep going. This is a possible signal here, right here, as we're crossing the line, and we're coming down here. I don't know if it looks like it's about the same. So you'd be out of one with your stop here, and you'd be out on the second one. Not much here on the 30. Let's keep going. Let's look at what it looked like on the 240. This is the Japanese yen. Look at this signal. It's a beautiful signal. Small body with a nice extension, and boom, look at this ride on the Japanese yen. Very nice. Here's another possible signal. I don't think this. I think the body, the doji or the spinner is a little bit too big compared to the extension. Here's one. Even though this extension doesn't look that dramatic, this is an official doji right here, where this bar is open and closes at the same price with an extension over the 8-bar moving average and taking out 5 to 6 previous highs. And we talk about that in the nuances. This is a very nice signal. And look at this. You would have had a short profit here, probably a couple of $150, and the second position would have been out here at your second close below here. So you would have had 2 nice profits here. Here's another signal, small extension. And I mean, you could have called this a signal, but again, I'm not sure. Although this is a body. Again, there's a little judgment here. Because you want to have an explosive move, but the most important thing, of course, is that it crosses the 8, and that the tail gives it some more extended meaning. And at the top of a run, a hammer is negative. So there's a number of things that you can convince yourself to take this, and if you did, you would have been fine. I wouldn't have taken it because it wasn't enough. Here's something that I would have taken. We have actually in this particular case, 2 dojis in a row, but a small body with a nice extended move. This is about the limit of the size of a body I'd like to see. And one interesting thing is this is an RSI, and it's not a diversion, but it's close. Even though this is an oversold and overbought indicator, which I show you. In fact, this is the work of a woman named Hema, and I'm sure Trish knows Hema, the next speaker. Hema is fantastic, and I use her material here with her version of the RSI to complement or give me the wind at my back, like seasonals and so on that we talked about with Wally. You notice that at this low right here, we had an oversold condition here. At this low, which was a much lower low, it was lower, but not a lot lower. This could be a turning market. When I got this signal, the fact that it just about took out we're at the high of all of this consolidation, a nice extension. Look at this ride of the Japanese yen. That's a beautiful thing. And so let's keep going. Let's see if I want to show you the screens that I look at. Boy, I hope I'm not going too fast for you. I've tried to. So here's a bunch of markets that I have found are ideal markets in the commodity area. This is the stock market. This is crude. This is S&P crude, natural gas, soybeans. Here's the gold. This is silver. Bonds have been really good. Let's take a look at the bonds, 10-minute bonds. I'm not trying to show off here, but look at this right here. You have a small body with a long tail and a cross. Look at this ride. Oh, my God. Look at this ride. Look at here. I mean, this is the 10-minute bar chart in the bonds. Here's a doji, the official doji. Okay, the best thing you can have with a just crossing. That's enough as long as it's on the other side. Look at this move. Oh, my God. 1, 2. Okay, this is what you're in this for. So when you take your short losses, don't think of the long term, because this is the kind of indecision to a powerful decision that doesn't look more powerful here, but it like a snowball rolling down a hill. Okay, no signal here. If you notice, yes, a signal here. Doji extension, taking out all of these previous highs. Nice little move here, followed by the first close, second close. You would have been out here, and then you would have been long again. Or in a move like this, you would have been long. You would have been long right here. You wouldn't have waited for the second. Again, another little nuance. But if you did, you would have actually got a better price on the sell. So I just want to, let me show you those screens again. So this is the 10-minute, and then I look at the 30s. Depending if it's near lunchtime or not. If I don't have a lot of time, I look at the 10s. If at the beginning of the days, I'm looking at the 30s and the 60s, which really, these are the same exact markets. I'm only in different time frames. So I set up my screen, the 240. 240 minutes. This is where I do some hunting around. But again, I don't like to hold positions overnight. So if I'm up in the middle of the night and I happen to be here, I'll consider it 240. And the dailies. I look at the dailies because I like to see the backdrop. Again, another wind at my back. If we were at a strong uptrend, then I like to really give extra consideration to strong to go long. Look at the Japanese yen. Look at this signal. I mean, that's too much risk probably to take, and it wasn't backed off. But it works in the dailies too. Here's a possible signal in the daily. Here's a confirming signal, same signal only twice. So you were short 2 here, and you waited a few days. If you waited in the daily, you got scared out of your wits over here, but that's okay because the next day it gave you you probably took profit right here, actually, and you were stopped out here because you moved your stop from here to here when you took your first profit here. If you only had one position, you got a little bit more out of it. But 2 positions are very, very much favored. Okay, let's see. I am looking at about 10 minutes left. So let me just go through. Let me go through a stock or two, and then we'll. Now stocks, it works really well on the intraday, but not. But there's too much gap between open and close to be as valuable on the daily charts. You can look at the daily charts, and you do see a signal on the daily charts. Then you can take it. This is a stock that I follow. It's called Overstock, and it's a retail company, but it's my play that I like to do for the Bitcoin because they're much into the backup technology in the Bitcoin. Let's see if there was any signals. I've got other moving averages, so try to ignore it. Here's a small doji and an extension, small doji and extension. So there may be a couple of signals that would have got you in for all this ride. So the daily is possible here. Not a lot of false signals. Here's a possibility. If you accepted this body, you're going to learn to accept certain bodies. I may not have. I don't see what's going on back here. But if you did, you would have had your first profit out here, and you would have been stopped out at break even on your second position. But let's take a look at the intraday with a. Let's look at Tesla. This is one I was looking at earlier today. Look at this. Here you have a signal right here, and you come up. You have 2. You bought 2 here, or at least if you bought 5, then or 10, then you're taking out half your position here, 5. So you've got a small profit, not a lot. Looks like about $2 or $3. But then look at this ride, and you're out here. Let's see, 1 close below, 2 close below. But immediately you're back in it because you've got even a better signal right here. Look at this ride from 228, all the way up to the high here, of which you almost got another signal. But and if you did take it, again, this body may or may not have been too big for you, depending on the parameters that you take about the first part of the 2-part trigger. And you would have had you would have had your first short position out at a short profit, and then it looks like you would have been out here. There's other ways not to. If you see this officially, you need to get out because it is officially, even though it's very close, it's on the wrong side for a short trade, and it's your second bar. But there's a nuance that I described that you can save this trade if you feel like you want to, and the risk, and you're not adding too much risk by putting your stop up above the 2 bars that you're concerned with. And then if you had followed that nuance, it's okay to get out here and take your short profit. That's fine. Believe me, in the end, it all seems to work out about the same. But I like to stay in trades if I can, and so I've worked on certain nuance to manage the trade. You would have been in for all of this until you had 2 closes above, which was here. You would have been in. Here's another buy signal right here. Small doji, extended move. This is a spinner, not a doji, because it's not exactly the same open and close. And you're here. You would have been scared a little bit here. But you would have gotten out of your first position here, and then you would have ridden this all the way back up. So I mean, Tesla would have been beautiful to consider on this system. Anyway, I think Teddy, I'm going to tap on you here and ask if there's any questions. Let me see. 1,000 shares. I think I'm looking at the questions here. If you've got any, Teddy, are there any questions I'm missing?
Not really. I forwarded all the questions to you, so you should be able to see all the questions that came
Okay.
through.
Let me look. Basically, for scalping, I guess you would call it scalping. 1 minute, 5 minutes. It works on. You can use it on any. I've been as low as 2 minutes on this system, and they all, But you need the indecision, and you need the I don't know why I'm not seeing, it's only giving me a very small, oh, here it is. I guess I have to tap on it to see. Does it work well on a 1 and 5? Yeah, 5 is really one of the nicer ones. And I'm hopping time frames just to get me my signal and know where to put my stop. You need guidance. You need to know where to buy and sell. And especially where to buy in this particular. You know where to sell from the two closes or the stop that you've lowered at break even. So let me continue and look at very interesting. Thanks. All right. Let's see if I missed any. I'm fantastic. I think that was a cheat. He's a client of mine. That's okay. Thanks, man. What do you trade every day? I've been trading because they've been very hot on the system right now. I noticed that things give me a lot of signals and then they don't. Right now, the Japanese yen, gold, and soybeans have been giving me nice signals. And the S&P, although my test account is not comfortable taking a couple of S&Ps at a time. Let's see what else. Very interesting questions. Does it work well on 1 or 5? Yes, it does. We have basically for scalping, I guess you can call it scalping, 2 positions or 5. You can, when I say 2 positions, it could be 200 positions. I'm saying apply them and then take off half at an extension at a move equal to the extension of the barrel of the gun bar. Basically for scalping, I guess I'm going the other way. Norman, I did see a Norman there. Hold on. Yeah, I mean, you can use, that's a very interesting question. Somebody asked a question about options per $100, or, yeah, I mean, I would take two option positions or 1,000 shares. Yeah, I mean, 1,000 shares, 100 shares, and then you liquidate 50. Yes, I mean, you get my drift. Half of what you position, you take out and then let the other, or you can be a little bit more creative. Twice the body size of the barrel, then take out another third, a third, a third, a third. You can play with this, trading plans are meant to adjust to what works, and not just adjust because you had a feeling or it happened in one trade. If it seems to be happening over and over again, test it by looking back at, like I do, and then then forward testing, using a demo account to see what would have happened, and then take the minimum risk, because you also have to challenge the mental part of your. As you increase the number of positions, you get a little bit more scared with some of these back-offs, and you say, well, this is too much risk. You kind of reduce the number of positions you get out. You've got to be comfortable with what you're trading. So always trade less than what you can is always my advice. So yeah, you catch my drift on that question. But in options, I ran the largest option firm in the country, or the second largest option firm in the country, back in the late 70s and early 80s. And I can tell you that if this kind of, and I can tell you, not because I've done it. I haven't done it yet. I haven't applied this to options yet. But you can see with these big moves, you're going to make a lot of money on options. And it's great to have an early trigger before the real momentum starts to increase your premium in the option. So some of the better signals for an option trader may be the shorter barrels with the doji, so that you don't get the premium extension, but you get the nice signal. So if you understand what I'm saying. So yes, you buy 2, you buy 4, you buy 10 options, and you liquidate half when you would have liquidated half in the futures market. I think you got to catch, you've got to let the underlying market be your guide to how you're going to buy and sell the option contracts. But it should work beautifully, because this system is all about catching the big moves. Okay, and I think you've seen how it can do that. We've got another thank you. Okay, I'm going to keep going then on examples, because it looks like I have another couple of minutes. So if somebody jumps in with a question, let me know. Anybody have a particular market, commodity market they want me to look at, just to show you that I'm not just showing you all the good stuff that works? Anybody want to see a particular futures market? I'm just waiting. Teddy, if you see the question pop up before. Oil. Okay, let's look at crude. Let's look at crude, and let's look at the 30-minute. I'm just throwing it up here. All right. We see nothing here, see nothing here. Now, here's a signal. Here is the favorite kind of signal that I talked about. You got a small body with a nice tail, okay? A shooting star type formation above a bunch of highs with an extension that's not so risk averse because it's not long in the scheme of things, but it's done a number of things. Like it's taken out all of these lows. It's following a spinner with a big tail, and so this is one that you would take. You put your stop up here. It would have been a nice nerve reacting ride in the beginning, but not so much because really, if you lost everything here, it's not a huge risk. But look, you're still in it. Well, here's one close below, but one close above. You're still in this trade all the way down to two closes. Look, let me look. Oh yeah, you would have been out right here. So this would have been a nice big trade. This would have been almost a four-figure trade. Okay, we keep going. We keep going. This is not necessarily a signal. I don't like the size of this body, and I generally don't take signals that don't first cross the line, because when the market stays up here, everybody is more bullish than bearish. When it's down here, you already have enough bears. I think it can sometimes limit the run, but it certainly didn't here. But look at this. Oh my God, my favorite kind of signal. The big tail with a nice extension that's not abusive as far as, again, the tail may make a risk abusive, so you have to, you may have waited for the back off here and saved a little bit of money, or saved a little bit of risk. But you're either in this or you're not. But if you are, look at this, another nice ride. First of all, you're out with your first position with a $500 gain. This is a $50. I think that's a $50. Let's see, the difference between the open at 51.13 and the close at 51.53. That's $600. So you're taking your first profit here at $600, and you're riding. Now you're up to 1,000. Now here's a reversal signal. Now you can do one of two things with a reversal signal. You can hang in there and wait for the second bar, which you would have been out here, or you can reverse your position. Either way, you got out. This is your second bar. You got out of your first. If you did reverse the position, or if after taking this you went short, because now the risk is even lower that you're closer to the 8-bar moving average. You've got your stop up here. You've taken a nice. They don't look like much, but this is a 30-minute bar chart, and it could be with volatility. It's been really good. The open and close is the difference between the open and close is 52.47.67. That's a few $100 on your first position, plus more here. Of course, you lowered to break even. You break even on your stop. And here's where we ended the day. We had a nice big signal that would have been about break even. Again, I wouldn't have been in this. You would have been actually break even here. All right, well, I think that's the end of my time, and I want to give Trish all the time she needs. And you've got all, if you want to contact me, you can't buy anything now, as I said. Just write me, The Disciplined Trader. If you don't write me at Hallet at thedisciplinedtrader.com, I won't know that you're interested in purchasing this when the site comes back up after maintenance at $397. And you can try this link afterwards. But because I want to get you the mug or the leather-bound journal as a bonus, and I need to know that you're from here. So write this down, Hallet at thedisciplinedtrader.com, and email me. Teddy, a pleasure. You let me speed talk. I loved it.
Wonderful. I'm glad you did. Thanks a lot, Norman, for actually coming out.